So ironically enough, last quarter you had some predictions. You said that we would see increased volatility in 2018, that we would see interest rates rise, that we would see equity returns actually decrease a little bit or be more minimal. And those predictions were actually accurate. So has your outlook changed for the rest of the year?
Well, first of all, I'm sorry they were correct, because that wasn't a perfect environment for us, and I wasn't expecting it to happen so abruptly. So the interest rate, at one point, the 10-year Treasury was up over 50 basis points. That's a very, very large move. It happened in a short period of time. Volatility went from extremely low to very, very high levels in just a matter of a few days. And last year, I think we had 7 or 8 1% moves in the S&P up and down for the whole year. We had 15 1% moves in the first quarter. So volatility came back with a vengeance. And obviously equity prices were down. So we were correct in those areas. I didn't expect it to come all at once like that. I thought it would be a little more gradual. So I still think interest rates will rise. I think that'll continue, but I think it'll be at a much more gradual pace, maybe more palatable. And to some extent, I think the market's now expecting it, so it should have less negative impact. I expect equities to perform positively. I don't expect them to be negative, and I think that, again, the sudden move in rates is what caused them, returns to be negative versus positive, because earnings are expected to grow 20 to 25% this year. Valuations started the year at 18.5 times earnings for the S&P 500. They've dropped to 16 because prices have been stable and earnings have gone up. So stocks went from relatively expensive to actually average to below average. So they're attractive again. So you would anticipate in this kind of environment normal type returns, that 8, 9, 10% type return for the rest of the year. Volatility is going to be high. It's not going to probably see what we've seen. We're not going to have 1,000-point moves in the Dow in 1 week like we did, but I think we're still going to see volatility because the uncertainty, what's coming out of Washington with trade, cabinet positions changing. What's the Fed going to do? We have a new Fed chairman. Are we going to have 3? Are we going to have 4 rate hikes? There's still uncertainty in the market, so we're going to see more volatility. But overall, I don't think we're going to have a repeat of what we had in the first quarter. I think that was a very strange quarter. The economic data still looks so solid that it'd be hard to imagine an environment where over the next 3 quarters we don't have positive returns in equities. Bonds, that's kind of a crapshoot. We're down 1.5 in the first quarter. We'd probably be lucky to have positive returns for the year right now based on that. So I'm not optimistic about bonds, but you have them in your portfolio to protect against something bad happening, and this, that's still a probability it could happen. That's why you hold bonds, but you're not going to make much in that segment.